So we are currently in a very interesting and unique spot in the market simply because things have been kind of flip-flopping around today, and I want to go ahead and provide some of the details. We're going to go ahead and parse through some of the words that President Trump has mentioned, but before we go ahead and talk about what's currently going on, why uncertainty is spiking up, I want to provide a friendly reminder that you don't want to become a silly salmon. Now, what do I mean by becoming a silly salmon? Well, oftentimes when bears are getting their food and they're eating fish, sometimes the fish will literally jump in the air, nearly jumping into the bear's mouth. And so the kind of analogy, right, that I'm trying to draw as a parallel is that if you're thinking, okay, we got good news, everything's fine, let me go ahead and just go full into the market. Just remember that things actually aren't fully in control to the upside, and there's still a lot of uncertainty. So you kind of want to still have a raised eyebrow, especially with the way that things are frequently changing. But with that said, let's go ahead and hop into my laptop and just cover some of the recent events. So right off the bat, I want to go ahead and start with this tweet from Spencer Hakimian. He is a fund manager, hedge fund manager, right? Very young guy, by the way. And excuse me, not tweet, post, right? Because it's X. I still get that confused, right? Twitter, X. But nonetheless, he mentioned that, and I like this post, by the way, just because I think it highlights the uncertainty very well. So he wrote, since Wednesday, we have had universal reciprocal tariffs, a removal back to 10%. Then, of course, the sequence of tariffs placed on China, 50%, 90%, 104, 125, 145. Then the good news of electronics exempted. And then finally, electronics now potentially back on. So what does he mean by this? Well, we have this post here from Trend Spider. They're a charting platform. And they wrote that yesterday Trump said there's no tariffs on chips, phones, and computers from China. However, then yesterday we had the Commerce Secretary say, actually, they're coming in a month, right? And so they had this little posts over here. You know how Bugs Bunny and Daffy Duck are like rabbit season, duck season, right? But with the market going up, and it highlights the situation very well, right? Things are just switching by the day, or really by the minute. Now, let's go to the source itself, which is Trump on Truth Social. And I want to go ahead and read this because this is actually a bit concerning just because of the way it flip-flops, right? That's the real concern, right? Just how things are changing. So he says, nobody is getting off the hook for the unfair trade balances and non-monetary tariff barriers that other countries have used against us, especially not China, which by far treats us the worst. There were no tariffs exceptions announced on Fridays. These products are subject to the existing 20% fentanyl tariffs, and they are just moving to a different tariff bucket. The fake news knows this but refuses to report it. We are taking a look at semiconductors and the whole electronic supply chain in the upcoming national security tariff investigations. What has been exposed is that we need to make more products in the United States, and we will not be held hostage by other countries, especially hostile trading countries like China, which will do everything within its power to disrespect the American people. We also cannot let them continue to abuse us on trade like they have for decades. Those days are over. The golden age of America, which includes the upcoming tax and regulation cuts of substantial amount, which was just approved by the House and Senate, will mean more and better paying jobs, making products in our nation, and treating other countries, in particular China, the same way they've treated us. The bottom line is that our country will be bigger, better, and stronger than ever before. We will make America great again. Okay, cool. Long, mouthful over here, but what this tells us is that this exception for technology, well, kind of is not there anymore, right? It's like, no, we're not going to have this exception. It's actually still going to have, be subject to tariffs. And so that means that the positive news, right? We went from negative news to positive news, kind of going back into negative news again. Now, we also have this report here from Goldman Sachs, JP Morgan, right? And their prediction is that they see gold to reach, and these are gold futures, to reach 4,500 by the year end. Pretty interesting, but not really when we know that gold historically is kind of the safe haven asset, especially when there's uncertainty. and also kind of just a hedge, right? That's mostly how people will trade the price of gold. And what we see here is that gold has been, spiking up massively, right? I mean, let's take a look at the S&P 500. We know the S&P 500 has been falling down, and then it's had these huge swing days, which, by the way, are not normal, right? These huge. I mean, let's go ahead and map this out real quick. So let's look at this day. Let's look at this one right over here, right? So we had this swing where we opened up here, and then we fell down all the way down here, but eventually closed here, and that was a 5.14 basis point percent move, right? We also had this huge swing over here, which let's go ahead and map that out, right? That was a huge move upwards. I mean, it's insane, the moves that we are seeing within the market, right? It's absolutely insane. The market is trading like a penny stock at this point, with all its like uncertainty and changes. And so that's why I kind of mentioned that you don't want to be a silly salmon. And you don't want to just say, okay, well, the good news is here, let me just go all in, because as you can see, things change pretty quickly. Now, something else I thought was pretty interesting, right? This was actually from earlier today. White House says that Trump has no plans to speak with Chinese President Jinping about the tariff war. So, not sure if this is part of the plan, part of the puzzle, part of the 3D chess, but definitely interesting. And what this kind of means is that the uncertainty is not gone. Now, currently, at the recording of this video, future markets have opened up green, which is positive. However, I mean, we have seen the future markets open up and then quickly, shift completely to the other side, right? So we've seen very drastic reversals in the recent trading sessions. So I wouldn't, put my whole bet on that. And so right now, right, it's not the time to be a silly salmon. You want to be kind of, cautious with these move ups or these large moves up, as it could also be exit liquidity. It could be bull traps where we move up and then ultimately just fall back down again. And you guys see, like, we just have huge days just swinging. Right now, personally in my portfolio, right, and again, you guys should only trade and invest in whatever you see value in. I still have a small portion in gold, mostly in XLF, which is an ETF for a lot of the companies in the financial sector, right, a lot of the large banks. I'm trying to think what else off the top of my head. Oh, and I have a small hedge holding SQQQ, which is the index. It's like the inverse leverage, 3 times leverage index ETF for the NASDAQ. So when the NASDAQ goes up, the SQQQ goes down, but 3 times. And you got to be careful when you're using those inverse ETFs, as they also have decay on them. And also they're leveraged, right? So they're bad. So I have a small portion. I did add a little bit more to it, but it's very challenging to go ahead and see what's going on. So slightly buying dips along the way, especially for the financial sector. I think they're a bit agnostic to tariffs because it's a service-based industry. But keep in mind, they're not agnostic to a recession, right? So unlike those soft line consumer discretionaries, like let's talk about Nike, right? Like those companies that make clothing, right? Those are probably going to be wrecked, right, in a trade war with all the uncertainty. But companies that like in the financial sector, right? They're agnostic to tariffs. They don't do any trading, but if these tariffs lead to a recession, well, then of course that means more delinquencies for these loans that these financial institutions loan out, and that's not good. So cautiously buying the dips, like that's just me, right? Just buying the small dips here, but I could be completely wrong, and maybe a recession does happen and things just capitulate. Now, fingers crossed, I don't want a recession to happen. I just have a small position hedging the market just as an insurance policy, right? So when I mentioned I had that SQQQ position, it's really just as like insurance policy, right? If the market goes up, great. And, I'll lose a little bit more money on that side with the shorting of it. But if the market goes down, at least, I kind of reduce the risk. So everyone plays the market a bit differently. Again, you should only trade and invest in whatever you see value in. But you guys let me know, what are your thoughts in this market? How are you maneuvering? Are you just simply buying the dips along the way? That's fine, right? Just incremental small dips, that's fine. I would just highly be cautious of going all in now, especially when things are changing very quickly. But with that said, hopefully you guys got some value in today's video, and I'll see you guys on this next video right over here. Take care, guys.